Rap, 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 rap.
Good afternoon. Welcome to Independent Investor on Independent Television. My name is Kingsley. Today, as usual, we'll be talking about the market as it is right now. We'll talk about yesterday's close. We'll look at other happenings in the economy, particularly the delayed GDP numbers, which will now come on August 31 as against the usual run of between now and August 14. What does this mean for investors? We also look at the earnings season that has ended and what it holds for how the market has benefited and what it holds for the investors going forward. And of course, the CBN's new directive that banks should clean their books of the toxic assets. With me, as usual, is
Ambrose and
Yes, it's another bright, sunny day in Lagos. Let's talk about the market yesterday. How did it close?
Yeah, the market yesterday was up. Kudos to the low price of equities. The market has really rallied down for more than straight 5 days.
Yeah.
But yesterday, markets have had a breath out, just to rebound with about 0.55 points. On that note, the big short in the market, the big blue chips, they gain. Stock like Total, stock like Dangote Cement, and when these stocks gain, it always changes index, and that's what we saw yesterday. But the good thing is that this price appreciation was nearly about 5 sectors that had this appreciation, meaning that people are really watching the price of stock. I always say on this program that price is the first attraction when you are investing in equity. So if stock is selling high, you need to, what is the value behind the price? If stock is selling, what is the value behind the price? At that particular, when investors try to marry them, it will always move them to take position at the right time.
Okay. As at 12:48 p.m. this afternoon, the all-share index was up 0.11%. That means the rally of yesterday continued this morning.
Yeah.
Okay. The advances for today, GT Bank was up 71 kobo, Stanbic IBTC 40 kobo, Zenith Bank 12 kobo, NB 5 kobo, Airline Services 4 kobo. What the banks are smoking this afternoon?
If you look at the banks, these are the ones that because are still expecting numbers to hit the market. If you look at the ones that have released the number before now, so that there are some mixed performance. Some are still making a marginal in their bottom line, but these ones are yet to be regular because they've written to their team before now that they're going to delay their result because there is sign of these people paying interim dividend. And for you to pay interim dividend, you need to audit your account. That is why they send notification to the exchange that we're going to delay our result. And investors are still keen in case this dividend will come as interim dividend, so that they will partake in the dividend. But the good is that again, people that are looking at the way of GT Bank, Stanbic, especially GT Bank and Zenith Bank. These banks have been consistent in terms of releasing results, also in terms of paying dividend to investor. And they know that any moment from now, for that, those that have those stocks are still watching why new investors are entering the stock. But to me, I will also advise investors that are looking to all these two stocks that when it comes to Zenith and GTB, if you want to protect your capital, GTB might be more attractive to you. But if you want to make money in the short run, to me, Zenith will be more attractive to me as an investor. Because if you look at the price of GTB around 24 naira, 29 kobo, where is it going? With the earning that we were expecting. But if you look at Zenith Bank as at 1650 to 16 naira, it looks more attractive. And also Zenith is also still selling at its fair value. That means Zenith still have margin of safety. But for GTB is selling above its book value. At the moment, for investor, it will safer for me to play with Zenith Bank. Also being one of the leading banks and supportability in the industry, it will attract you. But when we go to Stanbic, before now,
I was just going to that.
Stanbic before now, we're expecting the result, and because of the issue they have with the Reporting Council of Nigeria, the results have been delayed. We have not seen their full year for for 2015. I'm not saying the first quarter for 2016, second quarter, but since the price, moving up in the market, it's possible they've really sorted out themselves with the
Financial Reporting Council.
But in terms of operation, give it to them. They are okay, and their share issue is very small. I mean, anything they are having, because of their share issue is very small, it will transfer to what? To earnings.
Okay, decliners. 7-Up, it's down 5 naira 26 kobo. Total 3 naira. Guinness 189 kobo. CAP 167. Oando 28 kobo.
Yeah, so looking
So
at the decliner side of the market, 7-Up dropping from high of 196 to about 105 now. It tells you that investors are excited with 7-Up in terms of what their dividend payout.
Yeah.
No, a company that is paying almost 2 naira 75 kobo dividend, so market drop to 1 naira 16 kobo. But with a high price, investors will really treat you the way it is. Market are no friend. They will treat you the way you are performing. Their earnings drop, their dividend drop. Automatically, investor will find it exiting from 7-Up to another safe haven where they can make money. You can see the stock is dropping. But the only good thing that will save 7-Up is that if they rebound in their second quarter result that is positive, that can start attracting. But also because their share in issue is very small, that is why the price is even at this level. But that is another way investors should look at how to invest. A company that has little share in issue, they have way of sustaining their price even when there is crisis in the company.
Yeah.
You can see that Nestle, even with the bad result they release, not that the company have done badly, the FS extended the effect on them. That their price is still stable because most of the stocks is in the international investor. They are not selling. And Nigeria that bought Nestle at 100 naira, 2 naira, don't want to rush out because they know that this company will pass by. That's why most investors should always look at what's the share initial of this company, what is the factor behind their operation, where are they going. If you understand the mode of the operation, to go along for you to design when to go in and when to go out. For total is purely profit taking. Total move from 180 naira to 245. Investor, just in the short of 1 week, a good investor that's smart, like you can't stay in such because you can't sustain that price at now. You exit to enter another store. That's why you are saying, but the problem that you bounce back is still there because for now it's the best result in the oil and gas industry.
Guinness,
yes, that's why we're expecting their result in for now because their end of the year is June. I mean, Guinness have just 90 days to reach the result. We're already in August. I mean, by the end of September, you've seen their result in the market. But see, investors have seen their third quarter result and second quarter and first quarter and see that this company have not performed to expectation. That means likely they are going to adjust their dividend down is high.
Okay.
The investor will gradually, at this point, see an opportunity in other stock to sell Guinness and go to another. Also, seeing results are coming from that industry generally. If you look at first quarter result of International Brewery, second quarter result of Nigeria Brewery, it tells you that that sector is really struggling. I said earlier in this program that it's like Nigerians are really dropping the habit of drinking. That's that they are struggling. Their sales have remained at the starting point. That means they are not making more market. They are not opening another new market. On that note, the sale of these companies will naturally drop. When it drops, it will affect their sale price. And investors are starting seeing that if I remain in this stock, what's the end for me? Now that the economy is bad, Nigeria, their purchasing power is down. Instead of people save, go and drink. No. Now people prefer to buy what they eat than going to drink. On that note, naturally, until we see a revived economy, people can still go back to the drink. But now, it is what is your pocket that determine what you will do.
But I can tell you that the Nkobi joints have not, they are still busting.
I'm telling you, the rate of Nkobi people now have reduced, no matter how it is.
Okay, we will test that fact.
No problem.
Okay, GDP numbers are being delayed, as tweeted by Yemi Kale. Dr. Yemi Kale is the DG of the Nigerian National Bureau of Statistics. Now, the GDP Q2 data, it says, will be out on August 31, just as the inflation numbers. On August 30, July inflation numbers, how will investors react to this?
To me, this is another way of delaying decision making.
Yeah, okay.
Because many investors are looking at these figures to determine whether fully we are in recession officially. We know that we are working the path of recession, but this data will confirm it. Since we are not in data, people also relax that the decision of what to me, for investor, since they are giving us dates that we should expect this numbers to come. Let's be patient, but let me tell you that already analysts, professionals are saying that the July inflation rate should be in the range of 17.20 If that goes that means even the economy will be highly hit again when the figures hit the market. On that note, the investor should also be strategize where will I go now with my money, because any investment you are making now and it's far below even the 16
That's the return.
Yes, the return
below
is
16.5 as
now
it is
we're
now.
expecting that you move to
17.2. Yeah.
That means if your investment is there, no matter how safe it is, yes, they might pay you upfront if you are in the money in the treasury market, upfront or with interest. But when the money is coming back, they are paying you. So that money will not buy what you want to buy.
Yes.
On that note, you should think, where will I play along? That is why capital market will always remain a safe haven for them. But most of them don't understand how to play the market. They still depend on their brokers. No, the era has changed. Be your own broker. Learn with time, practice. Before you know it, you bounce back and become your professional, because it is your own money. That emotional will be there, that it's your money. But when you are giving a broker your money to invest for you, when it's losing, it's not ready because it's not feeling it, because it's your money. The day you call it, you have lost money. You can't do it. But if it's your money, you wake up in the morning, night to look at how best can I maximize this one, how can I create this one, how can I generate more from this one. On that note, it will make you to sit up. But to me, this data that has been delayed is dangerous for investment decision.
But the brokers will fight you. Okay, earnings season is over. So how did the market fare during the earnings season? And now that it's gone, what are we expecting before the next earnings season?
The earnings season for second quarter was below market expectation, because many companies posted disappointing numbers. And
yes.
on that note, it didn't make impact on the market and individuals company that released the results.
Instead, the market dipped. Yeah.
And this is also a pure reflection of what is happening in the economy.
Yes.
Because you only expect a bull market where you have a strong economy. When the statistics, when the economic
green,
are strong. When you have a good strong economy, you have a high employment, you have low interest rate, you have low inflation rate. This will make capital market to be bullish. But now that this is on the opposite side, it's going to reflect on the companies. If we're expecting that even by the end of the year, if there is no drastic change from the government in terms of their policy, companies will even post lower number compared to what they did in 2015. Why? If they are selling items that the public will need to patronize, yes, and they are not coming to buy because
low purchasing power.
Yes, yeah. How are they going to post profitability? And that means they're going to lay off their staff. I was talking with a big company yesterday, one of their staff in their finance. He said things they import to produce, they stop importing them, and because they stop importing what they used to produce, they've laid almost 60 to 70% of their staff out of the company for now, until they start importing again. That means if such people are out of employment for now, their purchasing power will naturally die, or it go down. Even though you are safe, you're going to start eating your savings. That means you won't buy the way you are buying before, because this you are eating your savings, then the new one is not coming in. Naturally, see, those companies will start getting low turnover. When there's low turnover, it won't affect your bottom line. That means investors have to be very careful.
That means the value chain.
Yes.
Because the suppliers, the contractors, everybody.
It will reflect on the economy. But the only good news is that the few ones that beat market expectation, there are very few. If you talk the stock like UCAP, Dangote Sugar, Resta, Total,
they are just a sprinkling.
There are just about 10 of them.
Yes,
10 of them out of that build. Those stocks are the ones that investors should look at. Mobi have been consistent in terms of dividend payment. Total have been consistent in terms of dividend payment. UCAP, one of the companies that does spring up powerfully in the last 2 years because of their dividend payment and their earnings performance. That means such stocks, investors should look the way of these stocks for now. But those that are posting bad results, you know that in equity investment we trade bad news.
Yes.
And you don't trade bad news with just ordinary eye. You need to have some technical knowledge so that you know when exactly it will come to a bottom price and a bank, because many stocks will go to a price that it will naturally become attractive for investors to buy. You as an investor, if you know when it will become attractive, you take it. As others are coming, that's how people start trading stock. At this point now, if you really want to make money in capital market, it is time for you to go for knowledge, go for training, go for education, so that you can maximize the economy. Because most times in the world, when a country is in recession, that is where people discover themselves in terms of becoming independent, because you know how to manage the board. When there is boom, little effort will bring money, but when there is recession, we need to sit down and think how to survive. That's why I encourage investors to look at these numbers, find how they can train themselves at the same time to make informed decision in this season.
All right. The CBN wants bank banks in Nigeria to clean their books of toxic assets ahead of their year end. What does it mean for these banks, especially those quoted on the Nigerian Stock Exchange?
Yes, I think to me it's good for the banks. I think the banks have been yearning for this. They've been asking for this from CBN for a long time. But like CBN this time, I decided to say, okay, let's give you benefit of that. Go and clean up. It's good for them and also good for investors too. That you know that this company is not carrying excess non-performing loan. Because when there is excess non-performing, it's going to affect the bottom line of the company. That means investors are going to be derived of getting dividend from the company or the bank at the end of the year. We saw what happened in First Bank. First Bank non-performing loan has gone to almost a high of 23%. While the official should be around 10 or 5%. But for a bank that have that kind of future, with ETI the same loan and few of the banks, Diamond Bank, and others in that rate. But with this clean up now, they will now mean that their book will be clean and they start on a clean and a new sheet, which is good for the market and the industry too. But the other thing is that one angle that if they are cleaning up their book, with many investors be rewarded within this period, or are they going to clean the book that from 2017 will now say a good legit that will be expecting dividend? These are the good things, but the question we should ask. But the only good thing is that when you are cleaning up your books, you are not dashing those people the money. When it comes back, it's going to come direct as profit.
Yes.
That's the only good thing. Like First Bank now, they made about 119 billion provision for bad debt.
Yes.
If those companies start paying now, it's going to go straight to their bottom line, as profit.
Yes.
That is a good thing now. But now CBN has said, okay, clean up everything. Let's know your position, where you are as you are now.
Yes.
And know, okay, whether you will be strong enough to
start
rolling again,
or you need fresh capital.
Exactly.
Yeah.
I think to me it's a good step, and also it will also make the bank itself to go out and look for how to create more money, and also to become more risk
averse.
Not averse, yeah.
Yes, but become more careful.
Exactly. When giving out their loan, they know how to tie up their loan very well, because that's what they expose, especially SPMB, what's called Diamond Bank and First Bank. They gave loan to most of the oil boys or oil company. At the end of the day, because the oil price collapsed, those guys are unable to come back to pay them. That means if you are giving loan now, tie it well. That's why most banks that are doing well in the industry, they know how they play the game. That is why they can still make provision for less and still give investors. Because if you see a company that is making provision for just 15 billion, one is making provision for 119 billion, you can see the difference is much. It's much. On that note, you should tie up your risk department and know what to do.
All right. Now, before we go, your stock picks.
Yeah.
Based on all of these things we have talked about, the economy is not doing well, the bad numbers. So, if you were to, between now and the end of the month, which stocks should investors be looking at to get some mileage?
Yeah, for despite that the market is rising now, I would still say investors should look the way of UBA. Look the way.
I will take notes.
No, you have
okay.
Put the dates as
UBA, UCAP,
Zenith Bank,
Zenith,
and
WAPCO.
Yeah.
They are not up to 10.
No,
they are playing safe.
No, the market is not. I advise people, you don't need to carry much equity in your portfolio. The fewer the equity you have, the better for you.
Okay.
That you would just put your money in a stock that you know they are not doing because you want to have the numbers. No, take stock that you can look with those seconds and know what you're having and what you're doing, than having 20 stocks that you have to sit down, be looking at one after one. Good stock, no one to enter. I always say them, like, if you're entering a fresh position that you have 2 million or 1 million, you don't put the 2 million direct
in one.
That's
all the eggs in one basket.
But even that position you want to take, you have 1 million to take position in UBA. The first day we are buying UBA, whether the information you have is first class or not, take some steps to protect your fund. You can put 300 to 400 from around 1 million and watch the trend of the market, especially that UBA. Once you go in, now it's better to average up than average down.
Okay. For those who were not at the last investdata training seminar in Lagos, listen to one of the participants.
I'm Dr. When I was coming, I was so expecting it as enlightened as I have been. But I want to advise everybody to invest in without information or knowledge. It's like you are groping a quicker. I encourage everybody that wants to make his life better that wants financial independence to take use of this opportunity to come to learn and invest. The stock market, from what we have learned, is still a veritable source of revenue.
Okay, you have heard for yourself. If you were not there, you have not missed out entirely, because the CDs, the video CDs are still available. To get your copies, contact the numbers on your screen. Okay, I should end the program now. Okay. You have listened to Ambrose as he reeled out the sure bets for the remaining part of this month. We have noted the date, today's date. At the end of this month, exactly August 31, 2016, we will look at the performance of these four stocks: UBA, UCAP, Zenith, WAPCO, Lafarge, that is Lafarge Africa. And then we'll be able to see what investors that invested, what investors have done with the numbers that he has given. Good afternoon.